Good afternoon, everyone, and welcome to this week's episode of a Junior VC Behind the Scenes. I'm your host, Mazen, and I'm joined by Shreyans, and we're here to talk about this week's piece, Is Lending a Feature or Finance's Biggest Money Spinner? So, Shreyans, let's can you tell us three things that you learned while writing this piece?
I mean, when you look at the piece and you go in depth, you'll probably realize that quite a lot has been written since the time credit evolved in India, right? Uh, Back in the day, when you look at it, much of modern credit was actually very unorganized,
Right.
built by certain individuals, pawnbrokers who actually built on the credit. But those three main things that we have, over a period of time that we've evolved and come to a place where we are today, that is that one, we do realize that credit, when you look at it, and the fintech models that have built have actually replicated quite a lot of the past, right? When you look at collateralized based lending, when you look at the point of sale based lending, or when you look at invoice discounting, a lot of these models were in different but raw forms in the past, right?
In offline forms, you mean? Like it was
Exactly.
happening.
Right?
Yeah.
A lot of it was in the offline form, where a lot of these, kind of old, kind of pawnbrokers or age-old businesses used to lend out a lot to their community, or used to lend out a lot to people, but just by looking at their cash flow transactions, right? This
And
is
it was
really essential.
relationship based. You know this guy, you know what he's doing, so you lend him.
Exactly.
Yeah.
Right? So a lot of the models that actually existed, uh, uh, you know, uh, were replicated in a newer form. But obviously, few things had evolved with the fact that the rate at which the loan could be facilitated, the ability to underwrite individual or businesses at a rapid scale. Uh, the possibility of acquiring a lot more customers to increase the volumes, and obviously the ability to collect in various forms have kind of tremendously kind of improved over the last kind of few decades that we see,
So
right?
technology has not really created new models, but allowed a lot of existing models to be operated at huge scale.
Exactly, right. Like what technology in general has done is that it has re-evolved kind of the old models and reincarnated in a new form, right? Much of what we see in general, you'd probably realize that it has already been done before, but needs to be done in a better way or a more optimized way to ensure that it reaches the masses, right? Nothing is newly invented, but it's only kind of rediscovered in a better form so that it reaches the masses. So it is one for sure that we probably realized while writing
Right.
this. The second, obviously, that we've realized is that uh, in the whole credit story of India is still at a very nascent stage, right? When you realize credit in India, uh, uh, few numbers when you are staggering, right? The fact that in 2017, majority of Indians, right, only 12% actually could get credit in a very formal way and was served credit, right? Which means that even in 2017, until the launch of UPI, or until the kind of geo took off, we were still living in a lot of informal loan credit base, right? Even till date in India, informal credit is about $500 billion business annually, and that is to say that obviously kind of startups are there, different kinds of startups, direct credit startups, or the core technology startups that enable credit, are enabling and giving out credit to the consumers at a very rapid pace, right? Which is why today probably 22% are served, but still we have a long way to go, a long way to go.
Even now, it's just 22%. So like
Yes,
78% of the entire population does not have access to credit.
either does not have access to credit, or is heavily underserved, or
Right.
is new to credit, right? Which means that they have just taken credit probably once max, right? Once or twice, and they're not kind of constant users of formal credit per se, which suggests that we have a very very long way to go in giving out credit to the masses, right? And that is a function of even how our country kind of propagates in that, right? The
And,
more
and also digitizing some of these offline models, right? And kind of making them, making the informal credit that you're talking about formal. So there's two things happening, right?
for
It's giving
sure.
people credit for the first time, plus bringing people from these offline credit systems into the modern financial system, which is
100%. I think what a lot of credit needs to be given to the startups that are actually not in the credit business itself, right?
right.
For something like this to happen, like say when Flipkarts or kind of the Olas get into the business, or just raw form of say something like an off business, which started off as completely different, and then kind of start giving out credit. Uh, Needs to be given credit, right? The ones who are not in the business of credit are enabling credit in a very formal way, because at some point of time, there is this intangible collateralization that has been taking place there, right? Meaning only if, because you are using my services, now you're bound to me and you can take a credit and you have to repay it back come what may, right? So a lot of these informal credits and that were there, and a lot of banks and financial institutions that were unwilling to give out loans so easily to them are actually coming into this picture because of these not so credit kind of companies that kind of started
Yeah,
off
yeah.
with,
All
right?
the companies that are now enabling access to credit and
Exactly,
providing
right. So
to
embedded finance is probably just taking off, and we could probably see a lot more of kind of finance attached to almost any industry, and you could probably enable it at scale as long as you have a decent distribution at it, right?
yeah, no, makes sense. So the Indian credit story is still in its nascency for sure, and there's a lot happening. So an exciting space. And what
Sure.
was the third learning that you took away from this
The
space?
third learning is that what we have got at stake, while credit have been kind of given out to the masses in very informal stage, what has been done in a formal stage has been regulated really well, right? We've been fortunate enough by with RBI kind of intervening whenever possible required, that it keeps its own checks and balances. There was this very interesting time in India where through digital means a lot of Chinese kind of apps or kind of so-called these pseudo apps had erupted, were giving credit to first timers quite easily within a matter of few seconds, right? Which obviously kind of unknowingly a lot of permissions on the digital device were given out by the consumers quite directly,
Yeah.
right? When obviously this took off and delinquencies and defaults had started coming out, we realized that it was actually hurting our nation's own interest, which I found I feel very few governing bodies at world stage do it at such kind of depths to
Yeah.
ensure that the users are rights are protected at scale, right? So RBI had intervened quite, and overnight had changed a lot of policies for this. Not just that, even in recent times when when buy now pay later apps grew at about 600% year on year, a ridiculous number, which meant that anything that grows really fast sometimes is not just that good, right? You probably realize that there's something or the other that is happening on the back end of it, that is propagating this growth rate at this
Right.
rapid scale. So intervening now and then and putting checks and balances at at every level for fintechs and for financial and digital companies always ensures that we are not over leveraging, but we're growing in the right path of spirit.
No, and regulators actually have a very difficult job here, right? I mean, on the one hand, by putting in more regulation, you make innovation harder, but at
Sure.
the same time, you have to protect consumers. And RBI, I totally agree, has done one of the best jobs of any regulatory body in the world. It's been amazing to see, and it's a big part of the story and plays into the future. And so, would like to wrap this up by asking you, what does the future hold? You know, this Indian credit story is in its nascency, but a lot's happening and a lot of good things are in place. So where do we go from here?
I mean, there are a few things, like we have seen with UPI, doing it for the current and savings account, that has propagated, rather and the debit account that has propagated this crazy growth. And obviously, when you think of it, the NPCI in general probably is one of the best fintech companies in the world in general, right? When you think of it, what they have done with debit transactions, I feel very few, kind of even private companies with all the authority that they have can do that quite seamlessly, right? The future, of course, lies with, while fintech companies are, of course, kind of doing their best in whatever aspects they can, future of a nation obviously lies with the governing bodies. It starts off with the governments, with the organizations that, independent organizations that form, with the likes of, say, NPCI, and new, which is NEU, or NUE rather, sorry, to understand that these are the ones that would probably push boundaries for the other fintech firms to evolve, right? Even with the likes of, say, Account Aggregator and Oken, you'd probably realize that now, we could probably easily seamlessly share data between, financial information users and financial information providers, with just a click of a button, with the user's consent, right? In that aspect, yes.
It's essentially infrastructure that fintech companies can build on top of, that the government's created and owns, and it creates an incredible platform. The Account Aggregator coming soon, and I think a lot of layers that can be built on top of it, which is
100%. What started off, in 2017 as just as a normal project or so, it took a long way coming, because a lot of financial institutions had to agree that they would participate in some form or the other and provide the data of the users, right? Like, say, but there are 110 crore bank accounts in India, right? Now, if I want to know the transactions of these bank accounts, the only possible way to get a look into the transactions is by sharing, right? From each one of them, right? It cannot be, a set bank has set number of bank accounts and they can only look at those particular users. A user can have bank accounts spread across different banks, right? So at the end of the day, if I need the data of how users are performing, participating, and how they are behaving in their credit aspect of it, is very important to make it a level playing field for almost all the players who are lending in that game. So I feel that is very important, and I think much of India's future lies there. Followed by, obviously, the Oken, which again kind of gives the whole lender borrower in a level playing field with whatever interest capacities that a borrower wants to kind of take it for. One of the key problems in India was that informal loans were given out at ridiculously high interest rate, and a lot of consumers had choked themselves while these issuers used to ridiculously charge 40% plus, starting off with pawnbrokers. Making it a level playing field for the consumers, obviously consumers and the businesses, makes it a lot more seamless for them to kind of take loans at MCLR plus whatever 5-6% per se. So that, I think, is going to be revolutionary, right?
Yeah, no, it certainly sounds like we're on the cusp of a revolution, and we've seen it play out, and still a long way to go. Thanks so much, Shreyans, for walking us through this week's piece, and thank you everyone for tuning in. We'll see you again next week.